You can just never feel away. Taking a big old drink. What? Jimmy Butler. I go to Washington.
Good morning, everybody. We'll get started here shortly.
Anything to extend the summer in my book is okay. Let's go warm back up. That's what Jim from Tory said. Anyway, we're going the other way for the weather right now. For those of you who, all you ladies and all you gentlemen who chose to wear hula skirts here tonight. I'm sure that some of you boys traveling across the west with those hula skirts might have gotten some interesting looks. Anyway. It's been all day down here, watching folks inside. I wonder that greater out in the world is going to be dark tonight. And I can sit on a fresh mojito, like we were going out of style. It's 5 o'clock, so that I can't get there if I don't stop at that sunrise. It's just so that the thoughts in my head. Back to love my clothes in the shade. They make the whole world dry. That contradiction is both fact and fiction, and the difference between the empire. And if that is what comes out, I just might make my friend see we're the same, both playing the game, but he's just got bigger skin. It's just back to It's just it's gonna help.
Good morning, everybody. Kind of an interesting start with the numbers coming out. Get started here in about 2 minutes.
There's a place called the Lord. That's where
A little Beach Boy tune in the background. All righty. Well, let's go ahead and get this ball rolling. Happy Friday, everybody. Um, let's see. One thing I do want to point out is, as far as our economic reports that came out, we had PCE, which was, everybody was kind of expecting that big volatile swing. Retail sales, wholesale inventories. We had three economic reports coming out at the same time. Okay. Now, for the last 8 months plus, since there are three economic reports coming out at the same time, the reaction may be delayed or slower. In observation over the last 8 months, when multiple reports come out at the same time, reactions have been slower than standalone. So, what I'm mentioning that for is that we got the Chicago PMI coming out, and it's a standalone um, report, and we also have consumer sentiment coming out. It's a standalone report. Okay. When multiple reports come out at the same time, we have been noticing over the last 8 months or so, since the new administration's been in office, that the reaction from those reports has been a little bit slower. And it's something that I encourage everybody to verify and document for themselves as well. Okay. Because usually there was a lot of buildup, a lot of talk about the PCE report coming out prior to that. Okay. Let's go take a quick look at the markets. On the small time frame, yeah, our zones are still quite far away. Okay, we don't have anything immediate right now to jump into on the S&P or NASDAQ. Let's see, we've got crude oil, got the pit open. Okay, crude oil did come up into a zone just prior to us starting. I did take that trade short right out of that zone. The Globex range on crude oil, okay, 56 cents. We got the daily ATR is about 27. So right around in that middle range. Okay, so things could be a little more choppy. Okay, just kind of looking for a small move right off the for the open range breakout type trade. I also want to point out on crude oil that price has been pushing on that 50 simple moving average, that daily moving average. Now, price getting back above that, that's going to be pretty bullish for crude oil. Okay. We also had to, I'll point out that golden cross that we had. Okay. And that will kind of inspire that price move even a little bit more once people start connecting that picture as well. Natural gas starting off a little quiet. We got the daily ATR of about 12 cents, and we got the Globex range about 50 cents or 5 cents, excuse me. Um, Looking at the open range breakout potential, it looks like I'm having a few data issues as well. Hey, Sil, is there a head and shoulders pattern on 4-hour chart? Coming right up on that in just a second here. Just getting the data reconnected. Okay, so a little bit larger time frame. Um, that's kind of tough to call. I mean, I'm looking at the daily chart just to get the basic shape. Yeah, we do have the basic shape, and we do have that higher neckline. Okay. Um, Typically with the topping pattern on the larger time frames, quite often the 88.6% retracement comes into play when you go from the high to the low. Um, but also on another note, when you go out to the larger time frames here, and I'm going to bring up the S&P as well. The S&P looks like it, to me, is going to do what we call is kind of a blow off to the upside. So something will come out that's going to trigger, since we're right at the all-time highs, um, nice strong uptrend. I'm kind of looking for that blow off to the upside. Now, a blow off is, we haven't seen one in quite some time, um, but it's a very strong move and it should happen over just a couple of days and then come right back down. Now, it could be one day, depending on what the news or event is that causes that move. So, although the shape is there, I'll agree with you on that as far as the head and shoulders pattern. And we're just on that right shoulder. Uh, is to keep a close eye on it. But we haven't got any real signals that it's time to start shorting that to the downside. Great question. Good to see you. All right, let's see. Let's come back out here. Crude oil. Yeah, just kind of looking for a little more confirmation with that. I do have my stop loss in place. Heating oil is often a good indication of whether the market's going to move back up or move back down. Heating oil tends to lead crude oil on a small time frame and get a slight direction on that. Okay, it looks like things are just kind of bottlenecking here. I'm gonna let this trade work out. We'll see as the session starts to open. I already have my protective stop loss in there. And I'm going to adjust that down here. All right. Okay, nat gas also just right around the pit open. We have that open range candle. Now, generally, I don't trade the open range breakout, right? When the Globex range is about 50%, between 40 and 70% of the daily ATR, okay? Because it's often what we've documented is things have been a little choppy, okay? As far as the session open. Stepping out a little larger time frame on the S&P. S&P is still an inside day. Inside days can be a little more choppy, a little more volatile. Uh, I'm going to monitor the news. Yeah, not seeing anything really breaking out there. Pay close attention to the volume. Look at that volume. I mean, we're close to the open. Travelers, Sherwin-Williams, McDonald's, Honeywell, American Express, even Goldman Sachs. 5,000 shares traded and it's off by $5. Okay, so what that generally means when we have stocks that are big up or big down on very light volume is that when the market opens, we get some of this whipsaw. Okay. Now, even intensify that, that whipsaw action happens even more when we're inside the prior session's trading range. Okay. So using the volume, using the inside day versus outside day, and right now we're still inside the prior day's trading range, we kind of use that as a tone for markets. Okay. Yeah, we're expecting a little more volatility. Okay. Now, things, the outcomes of this and additional observations is that a very high percentage of the time, price will fill the gap on an inside day. Okay, so market conditions, we understand that things can be a little whipsaw and choppy for an inside day. We also notice that very, very high probability the gap will fill the same trading day on an inside day. Very high probability of that versus if price trades outside or opens outside the prior session's range. We also notice that when we take trades on an inside day, right now, the price should go into a demand zone or go into a supply zone for that trade. Taking breakout trades is often very high risk, and you get a little whipsaw on those inside days, more so than an outside day. Okay, so the inside day, outside day, kind of and light volume kind of alerts us to the conditions around the open because all that those orders are going to flood into the market and they're going to cause price to react to find buyers or react to find sellers. So, and we also look for that gap fill. And one more thing on that is that on an inside day, like what we're seeing on the S&P, okay, is that if we wait a little bit later in the session, somewhere around 10:30, 11 a.m. Eastern time, that's when the market kind of settles down and starts doing its thing. Okay. So we might also have some window dressing. Let's see, this is the last trading day of the month. Okay. And we start going into September, which is the start of, we've already started seeing 5, 10, 30-year bonds and notes starting to roll from the front month to the back month. Okay. So contract rollover on the bonds and notes, treasuries. Um, And we're starting to see that the end of the quarter is starting to approach. And then we start a whole new earnings season at the end of, or starting in August. Okay. All right. NASDAQ. NASDAQ daily chart trading back above the 20 moving average and above the 50. I'm still looking for, and we're also looking at, if you look at the daily chart, you can see we got an inside day and also on the smaller time frame chart marking the prior session's high and low. Same rules apply. Okay, we do have a leg base group of candles right up at the top, right at the Globex high. Okay, so this is a supply zone, how we identify a supply zone, right around the Globex high and right where we have the filling of the gap. Okay. Inside days can be a little more choppy. We can even see on the large market cap weighted stocks on the NASDAQ, very light volume. Okay. NVIDIA and Tesla and Apple have quite a bit of volume on it, but the other ones are really slow. Okay. Now, these are just things that I'm talking about that are helping you understand the market conditions. Okay. We're kind of defensively jumping into the market. I mean, we're being very conservative because we understand the trading environment. It's kind of like, well, is the traffic heavy? Is the traffic light? What's going on there? Let's see, right around the gap fill, we also have and it's an inside day on the Dow, so we're looking for that gap fill, high probability. Okay, we got a leg base group of candles right around that area. Okay, and that's what we use as a potential zone. Okay, so you can take a moment and look at the zone. You can compare the risk, what you're going to be looking at, kind of get an idea of the size of the zone. Okay. We'll anticipate price will go deeper into that zone to uh, fill the gap. Often happens when we're on an inside day. Russell did break outside the prior resistance range, so a breakout trade on the Russell is okay. Okay. Zone entries are okay. Russell has had a very strong move to the upside. You also see the golden cross. The 50 crosses up through the 200 simple moving average. And we did go up and tag a small supply area at 23.97 yesterday, right around the highs. Okay, the gap is we're opening pretty flat on the Russell, so the gap is already filled. And let's bring up over here. Even with the PCE report that came out, there was not much reaction to the dollar or the 10 and the 2-year yield. We also see the pre-market trend kind of right in the neutral area, not giving us a clear direction. So it's a lot of the things that I'm setting up right now and talking about, the dollar index versus the 10 and the 2-year yield, things are quiet, non-directional. I mean, we've had a move up in the last 4 or 5 hours, flat on the 2-year, the short term. Okay. Um, Not much direction from the trend and also the volatility index, the VIX. Let's change that over here. Not sure why the pre-market is not on there, but the VIX is pretty flat at the moment. And we're going to come over here. We're going to bring up the pre-market indicator. Let's drop down to small time frame. We also get an indication looking at the NASDAQ pre-market indicator. Now, why do we use this? Well, we're looking for what is the trader's sentiment at the open. We've already noticed that there's light volume, okay? But is the sentiment more on the bullish side or more on the bearish side? The NASDAQ pre-market indicator is something the NASDAQ exchange uses to gauge risk in the market, okay? So they're using this indicator. Price is gapping up this morning, so it's a little more bullish bias. The NASDAQ 100 pre-market indicator has a 92% correlation as to traders' sentiment at the open. So with the gap up, traders' sentiment may be leaning more towards the bullish side. Okay. Now, if we incorporate that with the potential of the gap filling, a high probability of the gap filling on the other equity indexes. Now we have a direction where we anticipate price to move to. Okay. Also noticing that the middle section of the Dow 30 stocks are very small, unchanged, with very light volume. Okay. Which is, telling us something is still waiting out there. That might be news that's pending. I noticed somebody was telling me that there's been, for the last 2, 3 days, there's been a lot of riots and outbreaks, demonstrations in Indonesia, actually Jakarta. I don't know if you guys are seeing that, team. Maybe Harvey. Harvey's in Indonesia. So, or sorry, they're all in Indonesia, but Harvey's more closer to Jakarta. Yeah, it looks like they I saw some clips on that where they a lot of demonstration, a lot of people out there too. And it's not right around fasting, I don't think. Anyways, that I think we have either Jewish holidays, Muslim holidays, a lot of things going on down there, so some religious stuff too. Anyways, let's see, let's proceed here. All right, so we've looked at the equity indexes. We understand it's light volume. We're about 10 minutes away from market open, and the volume is still pretty light. Caterpillar is showing a negative $10.77 and only 17,000 shares traded on that. Okay. Um, NVIDIA's got some pretty good volume. That's normal for NVIDIA. Apple, who else do we have out there? Yeah, that's pretty much it. All right. By using the Globex range, we've got 5 cents, comparing it to the daily ATR. We see that the open range breakout trade is a little higher risk, a little more choppy, challenging. Okay. When the Globex range is about 50% of the daily ATR. Okay. So that I'm sharing with you right now is because there's not a lot of trade activity. Okay. And I'm hoping that you will understand that we're looking at different pieces of information to help us assess and look at, what direction the market may be moving. Okay. What the sentiment is. How are we going to set up our day? Well, we already know with the inside day and light trading volume. We also have right now looking at the market on open orders, and we're seeing that there's a sell imbalance. Okay. So when there's a sell imbalance, either they got to raise price up to find sellers, which is what normally happens. Okay. So even though you see a sell imbalance, okay, there's more sell orders than buy orders. Sellers want a higher price. Okay. And price needs to go up to find those sellers. That's why we're looking at the high probability of a gap fill. Again, little nuggets of information that as you keep collecting them, you start to understand the trading environment that we're getting and going into. Okay. Let's see. Everybody doing okay? Got any questions? Just post them in the chat. And we got that. Let's step out here. Now, there was not much reaction on or from the PCE report, but we do have another report coming out here shortly. Okay, about 15 minutes after the market opens. Okay, standalone report, and we've talked about that. Um, some of our candidates are still between zones, and you'll also notice when the market conditions are as such what we're looking at right now, that very often the levels of where we want to become a buyer or a seller are a little bit further away. Now, that may frustrate you because you were anticipating some pretty big volatility. Okay. But the market conditions are showing us that, hey, we need to wait, watch, use the information, document it, okay, and become that sniper to get into some of these trades. The euro, British pound, Aussie dollar, all in between. Same with the US dollar as we're watching the dollar and the 10 and the 2-year yields. We do have, looks like the 5-year, okay, the gap is a rollover gap. And we're right around resistance and new highs. Actually, I think we made a slight new high on the S&P yesterday. Okay. And our zones are quite far away here. All the Russell may be looking at a good breakout. I'm going to identify this little area right here as we start to, we're about 7 minutes away from the market open. And once the market opens, I'll be looking for a retest of that area. And trying to get the so 2382. I kind of want to see how the rest of the market opens up. Let's drop down to a small time frame. 5-minute chart. Looking for a way to splice into that. Might even get an early. Yeah, we do have a nice little fair, and I'm using the blue dotted lines are just fair value gap areas. And I'm going to look to participate in this one. I do have my setup here. I need to give myself a little more wiggle room for my stop loss. And I'm going to keep that right. I'm going to jump in on this one here. I'm getting in a little bit late, so I'll probably keep my stop loss a little closer. About that 2381.
Order filled.
Okay, trading 5 micros. Keeping my risk down. I've got about $100 risk on that. Potential reward, first area of target would be 2390, 2389 and 90 cents in that range. Above that, 2394. And as we go back out to the bigger time frame, okay, we're right at that breakout area too. Okay. So when we're looking at the larger time frame, keep our protective stop loss in place. Okay, just kind of recognize where it's at. We understand our risk. We also understand that the Russell is an outside day, price trading outside the prior session's range. And price trading outside that prior session's range allows us to take breakout trades, but the S&P is still inside, and we're looking for the gap fill, a direction. NASDAQ, still an inside day, also looking for the gap fill. The Dow, also an inside day. So S&P, NASDAQ, and Dow are all still inside days, so no breakout trades on those. Zone entries only. Okay. And you can see that the Dow is starting to approach the gap fill. Okay. And until we break out of the prior session's high or low, we will consider it an inside day and be a little slower to participate in the Dow, the NASDAQ, and the S&P. zone entries only. Okay. Wow, nice. And yeah, we're taking that out. See, being very methodic in your approach and also having the checks and balances that we are doing from our pre-market routine, we're able to participate in a trade, kind of walk into it rather than panicking and trying to chase it. Okay. So we got that 23.90. We're about 3 minutes away from market open. 23.90 being that first little potential profit target. And we're still making the Globex range. Okay. And we're still 2 minutes away. Yeah. So price has already gone more than 50% into that. So I'm gonna remove that zone. I'm not looking to take a short yet. Russell also getting close to testing that 23.97, the prior session's high. Next area that we'll be looking for will be the 23.95 area for uh, a little resistant. Okay. Let's step out and look at the exchange traded funds. Qs, a downside breakaway, and SPY, a downside breakaway. But the Russell is not doing a downside breakaway, and nor is the Dow. Okay. Now, breakaway gaps, we have to anticipate that very often with the breakaway gap, price will fill about halfway of that gap. Okay. Now, with breakaway gaps, either a downside breakaway or an upside breakaway, okay, price often comes back into the range of the gap and then continues. Okay. Now, coming back into the range, that's going to help us fill that gap potentially on the uh, equity index futures. Okay. Since their Qs and the SPY are gapping down, and we are expecting price to move back up on the equity indexes, also fill their gaps. Okay. Let's see what we got going on. Russell. Okay. Let that work. All right. Dow's coming right up. Let's see if we have any areas here. Yeah, we're looking at some resistance or some sellers, a zone entry. If you look over to the left, you can see that there's a wider zone where we have the leg base, and we have a fair value gap inside that. Okay. So we'll look for the opportunity to take a short-term counter trend trade at about 45,688. That's also going to fill the gap. Remember, counter trend trades, we're only looking for about a 1-to-1 or 2-to-1 trade off of that. Now we just filled the gap on the Dow. 45,688. We'll look to take a counter trend move back down. 688. Okay. S&P, oh sorry, NASDAQ. NASDAQ's not giving us much at all at the moment. We have an opportunity to go long, but we did have a pretty big sell imbalance. So my speculation would be price would be moving up to find those sellers right around that gap fill. S&P also somewhat quiet. Dropping down to the smaller time frame. Again, with the sell imbalance, I would anticipate price moving up before that happens. Okay. Anybody take the Russell? Even came back for you a little bit. Nice little breakout, testing the speed bump. Didn't violate our stop. Okay. Crude oil. Yeah, crude being choppy. Okay. I'm going to exit out of crude because I am anticipating just price to be choppy at this point until we get into a supply zone or demand zone.
Order filled.
Now, gas, keep in mind, today is the last trade date for nat gas. And very often we do see a price pull back a bit before and earlier in the session and then start rallying later in the session. Okay. Just to kind of condense the chart here. We do have a high tight base range. Okay. And the last couple times when we had that high base, we resulted in an impulse move. Okay. Now I was pointing this out in our pre-market routine as well. You know, looking at the impulse move versus a correction. So indexes have been in a trade range consolidating since last Friday's big price move up. So last Friday was a big impulse move. Okay. After an impulse, we go into a correction. And after a correction, we go back into an impulse. So the same thing's going on here with nat gas. Okay. Now, what we have to determine is where we're going to enter. Is this going to be a rally-based rally, or is this going to be a rally-based drop? Okay. One nice clue is looking and counting these big moves. They often happen in 3s and 4s. Okay, so we've got 2. So the possibility of price continuing that uptrend, high tight base is there, but we might need price to either form a new demand zone or drop back down into one. Okay. All right, Russell getting quiet. Let's take a look at all the indexes together. Yeah, I was expecting a little more volatility with that PCE report. And one of the things I put out there with these big moves like we saw Friday and we saw on August 1st on news reports and things like that, often that first reaction can be up to about 1%. So that's why I was measuring from the prior session's close down 1%, and that's where I was marking a couple of these levels at the extremes. All right, our large market cap weighted stocks, just looking across the board. We did have Alphabet got a new high. Checking indexes. And keep in mind, we do have that next report coming out, which will be the Chicago PMI, Purchasing Managers Index. Okay. All right. Now I do monitor the stocks. The stocks move first. Exchange traded fund moves second. and then the futures move. Remember, futures are a derivative instrument and they follow the cash market.
Order filled.
Yeah, it looks like the S&P. I'm just looking for opportunities here. Still not a whole lot, even on the small time frames. It's just inside day whipsaw, choppy market moves. I'm looking at different time frames around just to see where that possibility of trades can come into play. Breakout trades are going to be elevated risk. Actually, looking at this might become a V-shape reversal. See how volatile those potential breakout trades can be.
Order filled.
All right. Well, one of the things we teach in our Mastering the Charts Part 2 is when we have that, after a drop, we have the 3 touches of resistance, okay? And very often that can lead to a V-shaped reversal. So I'm going to be looking down a little bit further. A V-shaped reversal usually comes into play with the 224, 2618, and 314 extension. Now it's pretty aggressive to take the entry at the breakout. Okay, again, on an inside day as we're starting out, best to wait for the demand zones or supply zones. So a V-shaped reversal does have some price patterns that we look for. We have the XY leg, and then we have a pretty steep drop. Okay, so if we have X point, Y, the A point equals either a 224 extension, 261.8, or 314. Okay. Now with that entry potentially. Okay, the reversal out of that can be very steep and strong. Okay, the reversal out. We're about 3 minutes away from the next economic report. Now, with that steep move back up, the B point comes into play. We got the 78.6 retracement back up. And the shallow pullback C point is often at 23.6. And then we continue that move, okay? So the information over on the left-hand side of the chart, okay, so you got the classic V-shaped reversal. Information on the left-hand side of the chart often has a resistance after a strong drop. Now, this particular price pattern, especially with the basing action that we're seeing right here, okay, kind of what I have marked here, and we're using the XY leg. Okay, we got 2 minutes before the report. The V-shaped reversal comes into play. But this is also along the lines of what Richard Wyckoff teaches. Okay, you got the breakdown, the breakup, and then once price gets back above, you're looking for your corrective move. Okay, so it's a series. Wyckoff, Elliott, a lot of those folks, they've created these maps that we can look at. Okay, and the maps of price using specific measurements, and we start forecasting. Okay, so we forecast out to a demand zone, and we forecast out to a supply zone. Okay, so based on that report and based on what I'm anticipating, okay, and then the nice part about it is if we're anticipating taking the trade, we can think, okay, well, if this price pattern plays out, then I'm going to look for the opportunity to go long down in this range. Okay. We understand the volatility of the V-shaped reversal can be pretty aggressive. Okay. Taking a break out of that area, again, breakout trades on an inside day is higher risk. You're seeing that now by if you tried to take the breakout. Okay. All right. So I'm going to place this trade out here ahead of time, and so we can go look at something else. Okay. So I'm going to place a buy limit order, 64.76. Okay. And I'll look for that range right down there. Now you may in your trading plan have a way to get in to this move down. Okay. But I understand it is more elevated risk. And when you're doing these live trading in front of people, you want to be right. And you don't want to lose money in front of them, right? So we have a map, we have a plan. I don't have an entry to go short on the 5-minute chart other than just hitting the button, and that's not my trade plan. Okay. The opportunity that we're looking at for potential long is when price gets back down. Okay. Now, as price is moving down, I want the steepness of the slope to be consistent. With a V-shaped reversal, the slope or angle is very steep. Okay. How's everybody doing? Am I putting you to sleep waiting for the trade? I mean, it's playing out to the map. We just got to time that entry. Now, I'm looking for an entry about 64.76 area. My initial stop loss is going to be placed at the distal line. When you have a specific plan, a method, something that you trust and you verified, okay, many times, you can use that as a map. I mean, we're not chasing this trade and we're not doing high stress trading. Okay, we're waiting for price to return or come into where we perceive the buyers will be located. Okay. I'm watching Nvidia and I'm watching Apple over here, which are the two largest market cap weighted stocks. Microsoft's a close third or may even be second at this point. Okay. I'm looking at their overall direction and they're still somewhat mixed. I mean, Apple is stable. Nvidia is dropping, okay, which is impacting the markets. Okay. We already have our order placed. I have a stop loss where I'm going to place my stop. Let's take a look. We got the S&P. Let's see how we're doing with the NQ. Okay, just bringing up the stocks. Meta is still taking out the lows. Amazon is still pushing lower. Okay. We've got about 10 minutes before the 10 o'clock reversal. 85% of the time, market will change direction. Plus or minus a couple minutes. We do have Alphabet and Apple, which are pretty stable, but Broadcom, Meta, Amazon, we're watching for them to start throwing that candle there. Let's see. And on the NQ, also looking at that V shape, we're looking about 23,508 for a long. I'm going to place that. Pretty scary when prices dropping right to you. Okay. 23,508. Now, because of the V-shape reversal, let me put the Fibonacci on there. We're going from low to high, and we're going to look for that Fibonacci price extension, 224, 2618, and 314. I'm going to turn off the video for a moment because it's taking up a couple of my resources here. Wow, right on the back side of that. Okay, so we have a fair value gap and we have Fibonacci extension. More on the bottom side of that zone. Okay, we just hit the 2618 and got a little bounce. Okay, but I'm going to wait for the combination of Fibonacci price extension and that. So I'm going to still focus on the 508. Yeah, let's come back to S&P. And what did that one? Did that one come a little short? We still have time. 224, 2618, 314. No, 224 extension still down at that level. Now, what would change this, and let's drop even smaller, is let's get That out of the way. Now I'm watching on a 3-minute chart to see if there's going to be a momentum shift back to the upside. So in order to get that momentum shift, we need to see price take out one of the fair value gap areas. We just had one created, 3-candle pattern. Okay. I expect there to be a little resistance about 64.88 and a quarter on the S&P. And let's come over. And we're seeing right now on a 3-minute chart prices retesting a fair value gap. Okay, so we have a plan to go in at the lower level. Okay. We just saw some of the people that took an aggressive short. Uh, we lose the net. I'm not sure why the recording stopped. It might be on, well, we're recording on live stream, right? Okay. All right, so NASDAQ has bounced back up into the fair value gap area. Once it takes it out, then we're going to look for other things here. Yeah, there's a lot of stuff going on down there. Hopefully he's okay. Thank you, team. Okay, see how the fair value gap, we did find some unfilled orders there. I'm still waiting for price to extend down. I do not have an entry to go long yet until price reaches our extreme levels here. All right, let's take a look at, we got S&P futures are down 31 points. We have 1, 2, 3, 4, 5, 6, 7 Dow stocks negative over $1.94. 1, 2, 3, 4, 5, 6, 7, 8 positive. So that means net results, we have one positive. Okay, so if we take the 7 negative and the 8 positive, we can net the results. We got one positive, multiply that by 2. We can see that the cash market equals positive 2. Futures follow the cash. Okay. So if the cash market is showing positive 2, then futures are about 34 points oversold relative to cash. Okay. The nice part about trading futures is futures are a derivative. They follow the cash market. Futures being oversold by 34 points tells us the direction that price will like to balance out at. Okay. And throughout the trading session, we often see that futures become trading at a premium above the cash market or trading at a discount below the cash market. Right now, S&P futures are trading at basically a huge discount. Now, what we are waiting for is price to arrive in our demand zone. We have an order already setting out there. Okay. We understand that the risk is down to 64.71 until we start seeing a change in momentum back to the upside. Okay. Oh, come on. Almost there. Can you let Harvey know that it's recorded on YouTube? You know. Yeah, I think he's jumping around there. We're looking for that V-shaped reversal on the as well on the NASDAQ. We also have orders set up already.
Order filled.
Boom. All right. Let's come back in, make sure we have our stop loss. Oh, come on, chart. All right, my stop loss. I have $67 worth of risk, and I'm using 3 micros. Nice little pop off of that. S&P missed us by a couple of ticks. We still got 2 minutes till the 10 o'clock hour. Okay. That's pretty cool, you think? See, the information that I'm sharing with you, and the way that we were putting things together is all part of our pre-market routine. Things that we check, news, economic reports, different things that we have going on out there, also our prep screen zones as well. We have found a place that there are some unfilled buy orders, and that's what we're projecting out. Okay. Now we're not out of the woods yet. We just showed that there were some unfilled orders at a projected price level. Dropping back down to the 3-minute chart here, and we're still waiting on the S&P. Ooh, look at that volatility, 10 o'clock. Oh no, look at that. It missed us by 1 tick. Dang it. All right, so our stop loss also missed us by a very small amount. As price starts moving back up, we're going to look for new fair value gaps to be created. And that'll be our way that we can splice in or even add on to a position. Right now, we're just seeing the volatility of the 10 o'clock reversal. Did anybody get that entry on the S&P? Missed me by 1 tick. Dang it. What about everybody out in the YouTube room? You guys seeing some pretty good stuff? If please like and follow or like and subscribe. There's no cost to subscribe to our Friday live trading room. Nice job, Glenn. All right, so these are 3-minute charts. The technique I'm using on this is the fair value gaps. Okay. And in order to get a fair value gap, we're going to need to see 3 candles form. And then we look at that distance in between. Kind of like the one we had for the downside is we had candle 1, candle 2, and then of course the candle 3, and we measured the that gap in between, and price came right back up to it, the fair value, and then continued lower. Okay. So if the market is going to turn and go back up, then we're going to look for that same 3 candle pattern forming a new fair value gap to see a change in trend, a reversal. Kind of volatile here. All right, let's jump out. Look at a little larger time frame. S&P is still an inside day. That's why we had to wait for the zone entries. You see price stopped going down right here. You can look over to the left and we can look and see if there is a leg base group of candles. And you can alter the time frame if you need to make it smaller. Okay. We have the
Order filled.
oh, we just got the S&P. Fantastic. Okay. There are some characteristics around the leg base. The price leaving the zone. Okay, if we have leg candles leaving that are bigger than the leg candle in the zone, you often test that zone twice. The second time, price goes a little deeper into that zone. So make sure that we have our stop loss.
Order filled.
And let's come down at 70. Now, we need to see if there's enough unfilled orders to change the market trend. Okay. Price did slow down quite a bit. So there were some, but they're still lower levels. That's why we always have protective stop loss. It sounded like NASDAQ, we did get stopped on that. Okay, so we got another zone, a little bit lower. Watching the stocks, I'm looking for just a slight little bounce or a green candle starting to form. It looks like we're still waiting for Meta and Broadcom.
Order filled.
Yeah, it looks like we're going a little lower on the S&P. So let's go find those levels.
Order filled.
All right, what's going on?
Order filled.
Yeah, some rookie mistakes, yeah. Okay, now we're an outside day. We are still expecting the gap fill. And that's what's unique about starting off the session as an inside day is that's going to be our target back to the upside. Okay. Woo, love our stops. And there's our next. Ooh, that's way down there. Let's come back up to a little larger time frame. Multi-frame's taking out a lot of these little zones. I'm just coming back down to support. Wow, Dow's just right there.
Order filled.
Order filled. Order filled.
Just a little volatile. We're looking for a price to come back. Well, the Dow already filled the gap, okay, but we're looking for it to move back up towards the gap fill area. I'm going to reduce my risk. And I have two mini contracts. So I'm going to sell one as price bounces back up. First target, well, unload one is about that 508. And we should have a runner with very little risk on the trade. Yeah, not a lot of stepping in yet. Yeah, we do have Monday being a holiday, so a lot of the market volatility, is probably due to the lack of, or people taking a little bit longer weekend. That might account for why the volume is still pretty light. Still no change to go back to the upside yet. Either, and the thing with using supply and demand zones and levels and things like that is if price is not dropping into a demand zone, like what we saw on previous ones where we took the opportunity, okay, then a new one has to be created. Okay. So the opportunity becomes when price drops into demand or runs into supply, okay, we have something we can forecast. Okay. But if price starts to change direction and it is not in a demand zone or a supply zone, okay, if it's not in one, then a new one has to be created. And probably the earliest ones that we can start to see if there is going to be creating a new demand zone is watching how the technique of using the fair value gap area, like right now, price coming back up. We'll know that we have a trend change once this fair value gap gets taken out. Okay. And generally you can see if it gets taken out, if it breaks greater than 50% of that range. It's a pretty cool technique. All right, come on, Dow. See, in this case, on 5-minute chart, Dow dropped into an area where we anticipated there to be some unfilled orders. Okay. Gave us a place where we could manage our risk on the initial entry. We have adjusted that and we have that fair value gap right there. So as price hits that 45.08, okay, I can look to take a profit. Okay, that's kind of my first target area. If we're going to get a trend change, it'll take out that fair value gap. Okay, but there's always seems to be some unfilled orders around that area. Don't look like it's done going down yet. Let's see if that level holds. Oh, here comes Russell. And here comes Russell coming around the far outside. See on a little larger time frame, you're seeing the Russell is just staying above this little pocket of points here. Okay, and may use that area as a potential support. When we drop down to the small time frame, we find that there's, oops, we have a potential entry at 23.65. Crude oil. Natural gas. Yeah, see, natural gas, good example here. Natural gas broke the Globex low. It is last trade date on it, so we often see price pulling back. Right now, it pulled back and there was no demand zone there. So it's building a fresh accumulation of orders. Being the last trade date, I want to let that fresh accumulation of orders form and then look for the opportunity to splice in, anticipating that they're sorting out all of their the last holders, okay, people that don't want to take delivery of the nat gas, okay, and they're closing out that front month contract and moving into the back month. Now, this is more the professional traders doing this on the last trade date more than novice traders, okay? So you're trading with a different crowd on the last trade date. Yep, you're seeing markets have slowed down. We've got to take out one of those fair value gaps before we start seeing a move back up. Other than that, we just keep waiting for the next demand zone or the opportunity to get in short if price should return to one of our levels there. Gold rocking, that's good. Whoa! Yeah, coming right back up to that resistance area. And gold does have it looks like it's starting to momentum. It's got a couple of fair value gaps on a 60-minute chart. And it looks like silver is wanting to run up as well. Platinum. Pretty choppy on platinum. Copper. And copper's got a first little breakout. Now look at that. We got our 1% price move. Got a little bounce off of that. Not enough unfilled orders to hold it up. Price dropped a little lower and now is starting to build a fresh accumulation of orders. See, once you get more comfortable watching, I spend a lot of time watching charts, is you have to find when that new fresh accumulation of orders is coming in. Now there is a price pattern to this, the accumulation, price breaks out, and then we often see a retest before the trend gets established, making that first higher low after price took out the small time frame traders or sellers. And they'll come back down, test that level one more time. All right, taking one contract off. So wanted to mark it.
Order filled.
Locked in a profit, and then now my risk on the trade is $45. We did run into some sellers using the fair value gap, so we're going to see if it how price reacts with that. And yep, we just took out the one on the NQ. Okay, so some things are starting to change. We got a small one. Now I put the time on here, the time remaining in the bar, because that third candle must complete before I can activate a trade. Okay, and it's got about 19 seconds left. So once that candle is complete, I'm going to target that range 23,474 and 3/4. I'm going to target that as an entry to go long. So I'm going to let that candle complete. The next candle that forms, I'm going to look for a small retest of that 474 3/4. To splice into that. Okay. And I'll use that protective stop loss, right? And here I'll just kind of mark the level where I intend to put that stop loss on. Here we go. Now, just because I put the order on, it doesn't mean it's actually going to work. Okay. We have an entry. We're using a little area called a fair value gap on the price chart. I'm looking to go long at 474 3/4. My stop loss, initial stop loss, will be about 23,444. You can see how price used that fair value gap, dipped into it, okay, and then started to see a little bit of a pullback out of there, some unfilled orders in that area. If price is going to continue lower, if the price is going to continue higher, then we need to start a new one. We need to take out these. You know, the reason I went aggressive on this is because we did take out that fair value gap area. And you can kind of identify when we get these steep drops, when we start to anticipate the reversal, we must take out those prior fair value gap areas. Okay. Oh, it's going to make me sweat now. Nothing's not looking so hot. What's that saying? No adventures, any fun unless you a little bit of danger. Still not out of the woods. Come on, go green, go green. Yep, there we go. Look at that. See the S&P? We took out the sellers. A little fake out, breakout, came back down. The picture setting up. We have low risk. Okay. We have built a fresh accumulation of orders. You're starting to see the construction of a reversal. We've got the higher low. Okay. You always have to have a place where you're going to manage the risk. You can have the right picture, but you still need to know how to apply the trade and then work into your trade management. The Dow is not showing the same love, nor is the Russell. So we do have the NASDAQ and S&P showing a little bit more promise to move back to the upside. All right, so I am adjusting my stop loss up 450. Took that out. Still haven't taken that one out, so it's still basing. Come on, Dow. So if you like what we're showing in our method and approach and what we're doing here, we have two courses that we have available on our website, Mastering the Charts Part 1 and Mastering the Charts Part 2. I'd also like you to consider, if you're going to get Mastering the Charts Part 1 and Part 2, and also get the pre-market routine. The pre-market routine course that we put out there is what set the stage for all of this. We didn't have a really good entry to go short. In fact, the beginning of the session, prices were moving up. Okay. We took an account of the news and we see the economic announcements that are coming out. Things are quieted down now. Not showing a lot of breaking news at the moment. Our pre-market tips are all derived from the pre-market routine course. And the more that you do, and you start off with this, is you have specific things to measure, specific things to document, observe. We started off with the S&P looking at, we're starting off with the inside day, okay? Now the result with the inside day is that we often see that gap fill the same day. So you just got in at the low of the session with managed risk. If you had the idea that, hey, on inside days when we open like that, we have a 85+% chance we're going to fill the gap. Okay. Now that's a pretty significant move back up. Not only on the S&P, but we have that on the NASDAQ as well. Now we do have some speed bumps and some things along the way, some obstacles. Okay. But that's going to be my target, or most often it's a profit, a feel good. Okay. I'm going to look out at the stocks and start to see if the stocks are starting to turn and go back up. Okay. I anticipate price to fill the gap today. We need to see the tick over here, the tick Q, it needs to get back above the zero line, okay, to see that there's more upticks than downticks on that. That's off the composite, not just the NASDAQ 100, okay? So we've got a couple of trades now where we've got managed risk. In using the fair value gap method and approach, we will find ways to splice into this move up, but it does take time, okay? Once we start to get that momentum to the upside, we will start adding and adjusting to that position. Right now we got 3 micros on the NQ. I don't have anything on the S&P yet because we didn't take out that first fair value gap, and of course we didn't drop into that demand zone. Okay. If you need help or guidance with some of your trading or with just learning these things that we're sharing, okay, please reach out. All right. Yep. Still nothing changed yet, so I don't want to adjust my stop loss until we do see some change. Making reversal patterns is a little bit choppy, okay? In a topping pattern or even a bottoming pattern, okay, you get a lot of the ups and downs before you start the trend. And that's what you're witnessing now. Boy, Dow's rocking. Swing, and Dow's taking out that first fair value gap. Okay, so we have another one that's formed. So we're starting to see that momentum reversal off of that. Beautiful entry too. Anybody take that and sit into it through all my talking back and forth? All right. Well, I will see you guys over in the Discord room. I'll be over there shortly. I'm not sure what's going on with the YouTube channel. It looks like it might have gotten stopped. Hopefully you guys are over there in the YouTube. If you can give us a thumbs up, like and subscribe. All of that's really helpful for us. All right, everybody have a good trading day. I'm going to wrap up our session here, and we'll see you over in the Discord room. Have a good day, everybody. Bye now.